Good morning, everyone. I want to get this stock market technical analysis video out early this morning because I think we've seen the top of this recent counter trend rally. So again, if anybody's been following me for the last couple weeks, you know we've been short the market really on the triple Qs. I shorted this thing right here on January 4th. We rode it pretty much down to the bottom, and we were looking for a rally, a counter trend rally, covered some of those shorts, and now I'm starting to layer back in to those short positions. So I do think we've reached the top of the rally. I'm going to kind of lay out the case for where, why I think we've reached, pretty much the top of this counter trend rally, and I think we've actually got another leg lower in the triple Qs down to this trend line right here at 323, 330, somewhere right in there, as the next move lower. All right, looking at the hourly chart. Well, actually, let's start off with the daily chart here. Daily chart. We're above the 200-day moving average here on the triple Qs, just barely, and the day's not closed yet. So if they sell it down here and we close back below the 200-day, which is really sitting at about 366.18, then this move that we've seen so far this morning is just a stop rate, and that's what that's what you want to look for. You expect those kind of things when you're near key levels. Don't expect the market to just stop right at the penny. You would look for some sort of a stop rate move where it's going to make it look really bullish and then sell down and close bearish. Okay, so that's a potential things to look for. Also on the hourly chart, you can see we rallied. We had some resistance right here, or this was former support right about 369.50 and on the triple Qs, and we've pretty much rallied right to that level this morning at about I think the high was 370-ish, right about 370, but right in the area where it was former support, and it should act as former resistance if we're going to be right. If we continue to go higher from here, then we're probably not, any move higher from here, and I'm probably just wrong on the fact that it is going to have another leg lower. So we'll look for areas to start to probably cover our shorts if we continue much higher from this area. We also had this flag pattern. We popped above it this morning, and so far we're still trading above it. Let's see if we can trade back down into the flag, and if this was indeed that just kind of stop clearing move where it makes everybody think that the market's going to just continue on bullish right before it turns bearish. SPY, same thing, kind of trading above this flag on this hourly chart. And so we'll see what happens there if we're going to break back below. I'm anticipating that we do break back below, but we'll just have to see there. The daily, you can see we had some, this was a former key level, and it's right about 454.07. That's a former high right here, and then it was support right there. We had a little bit of chop through it right there, support right in here. And you can see that's basically the level that we're trading at. As if I extend it out, we're right there at that key level. So this is, and we're above it slightly. We've been above it so far. Again, I think it's a stop clearing move where we're just kind of popping above a key level of resistance, run a bunch of stops, and then roll over. So that's what I'm looking for. Again, I'm not expecting SPY to go much higher from where we're at. If it does and it continues higher, then, again, I'm probably just wrong, and we'll look for areas to probably start to stop out and cover our short trades. All right, but I do think we're right at that area where we should get rejected. Small caps is, hasn't quite reached the level of resistance, about 205.14 up to 209. We have not reached that area. Again, if everybody's got, this is a big level, and if you look at the IWM here, it traded sideways for a year. So there's all kinds of long traders that have been buying the small caps thinking, I heard a lot of people thinking that this was a bull flag pattern where you had a flagpole like this, and then you create the flag as this, and then they were looking for just another, huge move to the upside on a breakout of the flag. And likely they probably thought that this breakout right up here was the start of that next flag. But then that ended up being a bull trap coming back down. So now all these long traders are trapped with losses on this latest move down, unless they've, exited. And lots of them have, but the ones that haven't are trapped. So a rally, right into resistance, I'm not so sure we're going to actually even get all the way up there. We might just start to sell down early and really keep these longs trapped. So things to watch for there. Okay, I want to point out Qualcomm. This one, I believe they had earnings come out, and they're bullish earnings. Again, these companies, they know how to spin their earnings. They know how to make their earnings come out bullish. They have the cash to do it. They can buy back shares, but a lot of the time that's kind of the high water mark for these stocks. And I want to point out this. We'll go into Google, and then I want to look at PayPal as well. Qualcomm looks like it's going to continue to rally and up to make a new high right up in here. But the one thing I want to point out, and I think that will be the end of the rally for Qualcomm. It's going to be a divergent high. You see the big negative divergence that's just been building. So unless Qualcomm just really rallied strong and it could really burn the divergence and burn through it, we're going to just make a new divergent high, and I think that's likely going to be the top of this rally. So maybe a little bit more there. Again, you got to give this one some room. We did break down, but we recovered. So it looks like it just wants to put in another divergent high and then probably roll over. All right, so I'm going to give this one a little room. I think the markets are likely going to sell down here in this area. So Qualcomm might rally up, put in just a slightly new high, probably do it maybe today above this 192 area, and then, not really go much higher from there. Okay, PayPal. So PayPal gapped down with negative earnings, down 25%. That's a pretty big move. We have huge volume. So I think this is probably the capitulation, capitulatory move where everyone's just throwing in the towel. They just can't take the pain. Going on the daily chart, PayPal is down from the all-time highs, down almost 60%, about 58%. All right, so that's a good size washout move, and we do have bullish divergence, not fully confirmed, but we do have that on the PPO and the RSI. So you'll see here on the momentum indicators, we're making a new lower low in price down here, and yet momentum is moving. Not making a new lower low in momentum. We're uptrending in momentum, and we have that on the RSI as well. So bullish divergence. The other thing I want to point out, if I go to the weekly chart on PayPal, as I roll out, you got this is your long-term bull market going back to 2016 in PayPal. So there's your COVID crash. You can see we basically hit that, and here we are right in this area. Now, we're probably going to chop around here for a little bit, maybe have a brief dip or something, but what I would be looking for is to likely start building a long position in this one. This looks like the area of big support. Also on the daily, I want to point out there was that gap. I had this marked out way back here in 2021. I marked this gap out as a likely target to fill, and that's about 129.50. And you can see we have filled that gap. If I go to the hourly chart, we basically ran right down and tagged it at 129.50. So, this one's probably sold out. It's probably washed out. I could see us kind of grinding around, chopping lower, making slightly new lower lows over the next couple of days and kind of pound out a bottom. But I would be looking for, a move, this to really hold this area. Maybe a brief dip below this 127 and then a recovery. And that's going to be our buy signal on this one. So I'm looking to go long on PayPal after this move. Maybe just give it a couple days to kind of flush out, and build the bottom. And then we're probably going to rally. And a good target on this one would be a gap fill. You do have potential resistance right here at about 156, and then all the way up here at 175.54. You've got this near-term downtrend that we've been building right there. So that's a trade idea, a long trade setup. If we're going to make another leg lower in the major tech sector like triple Qs, PayPal's likely going to sell down with that. But again, it might sell down, break below this longer term support line that I pointed out right here, and then bounce back up and recover it. And that's going to be our signal. So keep an eye on that. I'll point it out if I see it. Google. Okay, so Google, had great earnings. They came out. Everybody's foaming at the mouth bullish on Google. However, when it opened today, it's just been selling, nothing but selling all day. And you can see we opened right up here with a divergent high. So we put in a new higher high in price, and momentum is, making a much lower low. So downward momentum, price popping above the highs. That's a divergent high, which is a high probability of failure. I think we've seen the top in Google for the near term at least, and we're likely going to sell down and actually start to make pretty substantial lower lows in Google. So I think this was likely the kind of the high water mark, and it's probably down from here. That's just my guess, but given that you pop up on the earnings report with the negative divergence, it's just a clear area to exit a long trade or even take a short trade, really. All right, gold still hanging in there, not a whole lot of change. So I just wanted to kind of touch base. We're trading right around the 200-day moving average. Bigger picture, we're just still within this wedge. All right, on the daily chart, you see this big wedge. Now we've got bullish divergence that's been building, and you can see the momentum just keeps increasing to the upside. Well, the momentum's kind of wedging as well. I guess you could say it's kind of wedging as well. But we did have bullish divergence right here. This was kind of your last divergent low. And then ever since this point in time, basically from here, is we've just been creating this wedge right there. All right. So we have to wait for this to break one way or the other. And no analysis on gold's complete without the dollar. So the dollar is running into support today. On the dollar, one thing that tells me I think gold's going to break to the upside is the fact that we do have negative divergence on the dollar. So we've just put in a new higher high on the DXY. Lower momentum on the dollar. We're coming down to support. So this is your daily chart, and this is kind of your near-term upward trend line. So we're at, pretty much at support right here. We need to see that break. This divergence tells me, this negative divergence tells me that we're likely going to break to the downside. Although we might pop here and then break. So we need to see that break before we have a definitive answer on gold. And gold's likely going to break out to the upside at the same time the dollar breaks down, if that's the way it's going to go. Okay, Tesla. So I think if the market's going to break down, then Tesla should continue to ride this downtrend line that it's put in on the daily chart and continue to make the lower lows and lower highs. Here's the hourly chart. So if you want to mark that out, this is coming back from January 4th. But clear downtrend, okay? We're making lower highs and lower lows. And recently we rallied right up into that trend line, and we're so far getting rejected. So as long as we hold that downtrend, we should see lower prices. Likely going to come down to the 200 and break below the 200. Maybe we get another bounce there. The dip buyers will probably try to fight it again. But ultimately, I think we get a breakdown in Tesla. As long as the market continues lower, Tesla should continue lower as well. And Lyft had a counter trend bounce recently. So Lyft obviously is downtrending, right? Going back to these highs here in March of 2021, clearly downtrending. We saw a counter trend bounce just recently. I think we still got one more wave down to the downside to come fill this gap right here at $32. All these gaps on these tech stocks have been getting filled. PayPal just filled theirs. Snap's filled its gap. I think Lyft's going to do the same and run down to this, fill this gap. So again, I'm still short this thing. We're just gonna, let it continue to do its thing to the downside. LPX popping above this support level here on this trend line. Again, I think we're seeing a stop run move right here. And if we are going to continue to sell down in the markets, I think we'll see a turn in this one. Probably today, maybe tomorrow. Sometime this week, I think we'll be back below this trend line and heading lower. So I still like it. Again, we had the big negative divergence on this one. telling me that it's just highly probable that we've actually started a downtrend and this was a counter trend bounce. Okay, so I'm sticking with that one for now. Again, if it continues to hold and we start to rally, then we'll look to stop out. You know, I wouldn't let it go above this. I definitely wouldn't want to let it go above this breakdown candle right here at 74.66. Really has no business being, you know, it doesn't have much business being much higher than where we're at for the highs today at 70. So I would say, you know, you start getting 71, 71.20 prints, then you're probably going to want to stop out on that one. Otherwise, we'll let this thing roll over and head down to our target, which is about 50, you know, about 50 bucks, which is where I think it's going. I want to continue to point out this one, GPL, Great Panther Mining. I believe they're a gold miner. Yeah, they do precious metals. But it continues to build bullish divergence. So I want to just point it out. You know, we don't have a buy signal yet, but you can see the bullish momentum on the momentum indicators, RSI and PPO. Downtrend line, we just recently had kind of a pretty big down move. It's up 24% today, but again, still below our downtrend line, so we don't have a buy signal yet. Need to see it break above this downtrend line. We get that, we're likely going to run up and gap fill up here at 36 cents. This one's a penny stock. It's junk stock basically. So again, you want to, you know, what I do on these lower price stocks, because they're highly volatile, if you get a buy signal, it's probably going to be up 100%, maybe 200% in a day. So you want to taper down your position size because this can go the other way against you just as big. So, you know, if you normally trade 10,000 bucks on a trade, then maybe you want to have 1,000 on this. You want to really taper it down. You don't need nearly as much to have really good gains, and it's all about risk mitigation. But I want to point that out. We've got bullish divergence building. We have a downtrend line. Looking for that buy signal. Okay, and oil. This is oil futures CL. So we've got clear, that we're looking at an hourly chart right here. But on the hourly, we've got negative divergence on both momentum indicators. And we have an uptrend line. We've been walking up that uptrend. We're right at support right now. So as I zoom out, you can see there's support. Hit it there, and we're right there. So I think we might get a breakdown in oil. And looking at the daily chart, no real bullish negative divergence on the daily. It's kind of mixed, but again, that hourly is usually going to give you the first signal of where things might go. So I'm not in this one. I'm not shorting it yet, but I'm looking for that breakdown in CL. And if we're going to get that impulsive leg lower in the market next, we're likely going to see oil sell down as well. I know oil's been a really bullish trade, but the market typically isn't going to sell down. You know, oil usually will go the route of the market, you know, and the SPY. So if the market's selling off and you're seeing weakness in the market, like economic weakness and just the SPY selling off, oil's going to trade down as well. So no sell signal, no reason to short it yet, but just things to look for. I'm going to wrap it up here and try to get it out. It does, as I flip back to the Qs, it looks like we're starting to sell down. Here's the Qs on the hourly. We've already come back down into this flag pattern. We're back below the 200-day. So again, I think what I just talked about in this video is starting to play out. Looking at the SPY, we're right at that flag. So I'm going to get the video out, guys. Let me know what you think. Leave me a thumbs up if you find value. Hopefully this is able to, you know, give you guys a perspective on the markets. Here's Amazon. Look at Amazon get rejected right at that resistance. And I want to point this one out right before I wrap up. Here's the bull market in Amazon on the weekly chart going back to 2008. So I know everything feels bullish this week so far because it's just ripping to the upside. That's how bear market rallies work. They're very impulsive and they're very steep. So they flush you out of your shorts. You know, they get you emotional. Well, here is Amazon on long-term trend line going back to 2008. We tagged it there, and look what's going on here on Amazon. We had a sell signal on the weekly chart in Amazon 2 weeks ago. In the last 2 weeks, all we've done is rallied up and backtest resistance, and so far getting rejected. We have not recovered. So technically, that's why I think we're going to continue short, staying with the short trade. We see big charts like this where they're, They're not able to recover support. They're getting rejected. We're seeing selling pressure at resistance. Sell the rip. That's what I keep saying. You know, as you rally into resistance, you want to short or, you know, exit into resistance. It's not a buy the dip, it's a sell the rip. And I think that's going to continue in the market. So I'm going to get this out there. Check out the stock market technical analysis course as well, guys. Link in the description below. That'll help you with your skill set so that you don't let, you know, emotions just get to you. You're able to really use the charts to your advantage. And I will catch you guys on the next one. Bye.